Welcome back to Investing Talk podcast.
Great to be back.
Today we're doing an exploration of TJX companies. Their earnings report is just around the corner, and we want to really unpack what's going on.
Yeah, look at the expectations, their history, what the market's thinking. Basically give you a clear picture of this major retailer.
Exactly. We're going to sift through the analyses, the company info, and pull out the key nuggets so you understand not just what might happen, but, why it matters right now. And before we dive in, just a quick reminder, if you find these discussions helpful, please do subscribe, like the video, leave a comment. It really does help us out.
Absolutely. And hey, if you feel like buying us a coffee, the link's usually below. We appreciate it.
We do. Also, if there's a specific company you want us to look into for a future analysis, drop it in the comments. We definitely read those.
We love getting those suggestions.
Okay, so TJX companies, they're set to report earnings on August 20th, 2025, and that's before the market opens.
Right, pre-market. So we'll see the reaction pretty quickly.
So what are the analysts actually predicting here? What's the consensus?
Okay, the street's looking for revenue around $14.12 billion. And for earnings per share, the EPS number, the consensus is $1.01.
$1.01 per share. And EPS, just quickly, that's profit per share of stock, a really key number.
Definitely. Now, what's kind of interesting here is that there isn't really a strong whisper number floating around for this quarter.
The unofficial estimate that sometimes hints at a surprise.
Exactly. Usually you might hear chatter about a higher number, but this time the market seems pretty tightly grouped around that $1.01 consensus. It suggests, maybe expectations are fairly well aligned.
So how does that compare to what TJX themselves have said, their own guidance?
Good question. So TJX guided for Q2 EPS between $97 and $1. So that $1.01 consensus is just slightly above the top end of their range.
Okay.
They didn't give specific Q2 revenue guidance, but for the full year, fiscal 26, their EPS guidance is between $4.34 and $4.43.
So that tight consensus near the top of their guidance maybe suggests the market expects them to hit the high end or maybe just edge it out.
Yeah, possibly. It implies less room for a huge positive surprise based purely on beating guidance, unless they really blow past that $1.01 mark.
Okay, that sets the stage. But let's look back a bit. How has TJX actually done against expectations historically? Because their track record is pretty notable, right?
It really is. This is where it gets interesting. Over the last 4 quarters, TJX has consistently beaten those EPS estimates.
Every single time.
Yep, 4 for 4. For instance, back in Q1 fiscal 26, that was May 2025, they reported 92.2 cents versus the estimate of 90 cents. So a 2.2% beat.
Not huge, but consistent.
Exactly. And they had positive surprises in Q4, Q3, and Q2 of fiscal 25 as well. It's a pattern.
And that pattern, that tells you something about how they operate, doesn't it? It's not just luck.
Absolutely not. Consistent beats like that often point to maybe conservative guidance from management or just really strong operational execution, maybe a bit of both.
Right. They set a bar they know they can clear.
Or they're just very, very good at managing their business week to week, quarter to quarter. For you as an investor, it signals reliability, a degree of predictability.
Okay, so they often beat. How does the stock typically react after these beats? Does it jump?
Generally, what we've seen is modest price gaps up right after the earnings release. A little pop.
Modest, not massive leaps.
Correct. And whether those initial gains hold really depends on the forward guidance, the outlook they provide. If the outlook is constructive, positive, the stock tends to hold on to those gains.
Makes sense. And the underlying trends supporting these beats, what's been driving the performance?
Well, looking deeper, TJX has shown pretty steady year-over-year growth in that EPS number. And revenue growth has been consistent too, usually in the mid-single digits annually.
Solid, not spectacular, but steady.
Exactly. And importantly, their margins, gross and operating margins, have been stable, and in some recent quarters, actually improving slightly.
Which is impressive in retail right now. How are they managing that?
Our sources point directly to their skill in the off-price model. Really strong execution there, and very disciplined inventory management. That ability to buy opportunistically and turn inventory quickly without resorting to huge markdowns is, well, it's their secret sauce.
Disciplined is the word that keeps coming up.
Okay.
Okay, so focusing on this quarter that they're about to report, were there any big company-specific events, any major news or disruptions that might affect these results?
From what we've gathered, no major operational disruptions were reported for TJX during the quarter. Things seem to have run relatively smoothly on that front.
Okay.
But a couple of things are worth noting. They did recently raise their quarterly dividend again, up to 0.425 cents per share.
Oh, interesting. What does that yield work out to?
Based on recent prices, that's about a 1.3% yield. Not huge, but a dividend hike is usually a signal of management's confidence in future cash flow.
Right, they feel comfortable returning more cash to shareholders. Anything else?
Yeah, institutional and hedge fund ownership remains very high. It's over 91%.
Wow, 91%.
That indicates a lot of conviction from large, sophisticated investors. They've done their homework, and they're sticking with the name.
That's definitely a vote of confidence. Now, you mentioned analysts have been generally constructive. Is that unanimous? Or are there any dissenting voices, any potential red flags being raised in the commentary we reviewed?
That's always a good question to ask. Is everyone just being optimistic?
Right.
But honestly, looking through the recent commentary leading up to this report, it's been remarkably consistent, generally constructive, as you said. We haven't seen major rating downgrades or analysts suddenly turning cautious.
So, no major contrarian calls grabbing headlines.
Not really. The street seems pretty aligned on TJX's strengths, those defensive characteristics, their ability to navigate sort of a mixed economic picture.
Yeah.
It seems less like blind optimism and more like a recognition of their specific business model resilience.
Okay, let's widen the lens then. Talk about that mixed picture. What's happening in the broader retail sector and the economy that's relevant here?
Well, consumer spending overall is still positive, which is good, but there are definitely signs it's moderating, slowing down a bit, particularly impacting lower-income consumers.
And how does that play out for a company like TJX?
Actually, this kind of environment can be a sweet spot for off-price retailers. It seems a bit counterintuitive, maybe.
Explain that. Why does a slowdown potentially help them?
Okay, think about it. When shoppers get more cautious, more value conscious, where do they go?
Places where they feel they can get more for their money, like TJX, Marshalls, Home Goods.
Exactly.
Yeah.
Foot traffic to off-price stores tends to pick up as people hunt for bargains on branded goods. That's the demand side. Then there's the supply side. When other, maybe full-price retailers face slower sales or have excess inventory, they need to unload it.
Ah, so TJX gets access to potentially better merchandise at even better prices.
Precisely. Their buyers are experts at finding those deals. So a cautious environment can actually improve both customer traffic and their access to desirable inventory at great costs. It fuels their whole model.
That's a really clear explanation of why their model works in these conditions.
And we're seeing signs supporting this. Retail foot traffic, especially to value-oriented stores, has held up well. Macro-wise, yes, inflation is still sticky, but wage growth and employment levels were reasonably supportive through the second quarter of 2025. It's not a boom, but it's stable enough for consumers to keep spending, albeit more carefully.
Okay, so the backdrop seems, well, almost favorable for their specific niche. How has the stock itself been behaving leading into this report? Any big run-up or sell-off?
It's been pretty calm, actually. The stock had a gradual climb earlier, but recently it's been consolidating, just moving sideways more or less.
So no major last-minute bets being placed through the stock price itself?
Doesn't look like it. It suggests the market is kind of balanced, waiting for the actual numbers in the commentary. Not overly bullish, not overly bearish right now.
What about the options market? Does that tell us anything more? Sometimes you see big bets there.
We looked at that too. Both call options, bets on the price going up, and put options, bets on the price going down. The volume and the open interest are roughly balanced.
So, again, no strong directional bias there either.
Seems that way. It reinforces that picture of balanced expectations. Now, what the options market is telling us is about the expected size of the move.
Right, the implied volatility. What's it pricing in for TJX post-earnings?
It's pricing in a move of roughly plus or minus 4% to 5%.
Okay, 4 or 5%. Is that high or low for TJX?
That's actually a pretty typical range for them around earnings. It reflects, a moderate level of uncertainty.
Right.
The market expects some reaction, but isn't bracing for a massive double-digit swing unless there's a really big surprise.
Got it. So, putting all this context together, the history, the macro, the market positioning, let's talk potential scenarios. What does the bullish case look like, the real home run?
The best case scenario is what's often called a beat and raise. So TJX would need to deliver EPS and revenue that are significantly above the high end of their own guidance and clearly beat that $1.01 analyst consensus.
More than just the usual small beat.
Right, a decisive beat. And crucially, that needs to be paired with positive updates on comparable store sales, showing strong growth in existing stores, and proof that their margins remain strong or are even expanding.
And if they deliver all that,
then you could definitely see the stock break out of this consolidation range and potentially push towards new highs. It would signal their model isn't just resilient, it's actually accelerating even more than expected.
Okay, that's the dream scenario for longs. Now, the other side, what does the bearish case look like? What constitutes a miss?
The bearish case is essentially the opposite. A clear miss would be EPS or revenue coming in at, or even worse, below the low end of their $97 to $1 guidance range.
Falling short of their own forecast.
Exactly. And it would be particularly damaging if that miss was accompanied by a weak forward outlook for the next quarter or the full year.
What else would worry the market?
Any sign of unexpected pressure on their margins would be a big red flag. Maybe higher costs they couldn't pass on, or maybe they had to discount more heavily than usual. Also, an unexpected buildup in inventory,
Why is inventory so key for them?
because their whole model relies on turning inventory quickly. If inventory starts piling up, it suggests either demand is weaker than they thought, or maybe they made some buying missteps. Either way, it's bad news for an off-price player. Cautious commentary on store traffic or spending trends would also add to the negative picture.
Okay, so margin pressure, inventory issues, weak guidance. Those are the key things to watch on the downside. We've covered a lot of metrics. If you had to pick just one key thing you'll be watching most closely when the report comes out, what would it be?
That's tough, but for an off-price retailer like TJX, I have to say comparable store sales growth, the comps,
Why comps above all else?
because it really gets to the heart of their business momentum. Are they attracting more shoppers to their existing stores and getting them to buy more? It strips out the effect of just opening new stores. It's a pure measure of the underlying health of the brand and their connection with the consumer.
Makes sense. Comps first. What's a close second and third?
Definitely the commentary around margins, can they sustain that strength? And of course, any update to that full year guidance. Those three together really paint the picture.
Comps, margins, guidance. Got it. So let's try and synthesize all this. Based on everything we've discussed from our sources, what's the overall leaning heading into this report? Bullish, bearish, neutral, and how confident are we?
Okay, pulling it all together. Our sources seem to suggest a leaning that's, I'd say, neutral to slightly bullish.
Neutral to slightly bullish. Okay.
And in terms of confidence in that leaning, let's put it at a 7 out of 10.
A 7 out of 10. Why that specific leaning and confidence level?
Well, the bullish tilt comes from their consistent track record of modest beats. And like we discussed, the off-price model is just so well-suited to the current value-seeking consumer environment. They should be doing reasonably well.
But why only slightly bullish and only a 7 confidence? What holds it back?
The main thing capping the enthusiasm is that a lot of this seems priced in already. That typical 4–5% implied move suggests the market isn't expecting fireworks. Significant upside probably requires more than just another small beat. You need that forward guidance to be meaningfully better than expected, or for those comps numbers to show a real acceleration.
So solid performance expected, but maybe not a huge positive surprise.
That seems to be the base case, yeah. More steady execution than a massive breakout, unless they really surprise on guidance or comps.
Okay, that's a very clear takeaway. So what does this mean practically for different types of investors listening? How might they approach this?
All right, let's break it down. For more risk-averse investors, probably the prudent approach is to wait. See the actual results, hear the guidance, let the initial dust settle.
Avoid stepping in right before the uncertainty.
Exactly. Post-earnings volatility, even if it's only that 4 or 5%, might offer a better entry point once you have the actual information.
Okay. What about more risk-tolerant, maybe shorter-term traders?
Well, given that modest 4 or 5% expected move, strategies designed to profit from that level of volatility could be considered. Think things like at-the-money options, straddles, or strangles, maybe. But, and this is important, the premium you pay for those options reflects that expected move. So you need the stock to move more than expected just to break even. And big outsized moves are pretty rare for TJX without a major surprise.
So potentially playable, but not necessarily an easy trade?
Right. Now, for the long-term investors,
People holding TJX as a core position, perhaps.
for them, TJX has historically been a very strong compounder, consistently growing earnings over time. So if there's a pullback after earnings, maybe the market overreacts to something minor, that could be seen as a buying opportunity. Using dips to add to a long-term position is often a credible strategy here, especially given how well they tend to perform during choppy economic times.
Writing out the short-term noise for the long-term trend.
That's often the approach with solid companies like this.
All right, so as we wrap this up, here's a final thought for you to consider. Beyond just the TJX stock price or the quarterly numbers, think about what their performance tells us more broadly. How might TJX's results, how well they're doing, what they're seeing in their stores, act as a kind of barometer for consumer health and behavior right now?
That's a great point.
Their report could offer some really fascinating clues about how everyday people are truly dealing with inflation, economic uncertainty, where they're choosing to spend their money, especially when it comes to value versus full price and discretionary items.
Yeah, are they trading down? Are they still buying apparel and home goods, just seeking discounts? It's a real window into consumer psychology.
Exactly. It'll be interesting to see what insights emerge from their report about those deeper trends.